And in our top business story today, DP World aims to see their investments double in 2015 as the world's fourth largest port operator looks to increase its capacity by more than 14%, according to a local report. DP World Chairman Sultan Ahmed bin Sulayem says that they are looking at spending between 1.4 billion and 1.9 billion US dollars this year, up from 1 billion last year. Between 500 million US dollars and 700 million will be invested from 2016 to 2020. DP World's capacity will rise to more than 80 million 20-foot equivalent units this year from 70 million in 2014 through expansions in Turkey, Rotterdam, India and Jebel Ali in Dubai, which is the MENA region's biggest port. It will be able to handle 19 million units next year after its expansion, and depending on market demand, the multinational plans to boost capacity to 100 million units by 2020. The first half of 2014 saw its net cash from operating activities increase to 551 million US dollars. Meanwhile, the third quarter of last year saw the company handle gross volumes of 15.4 million units, a 9% increase from 14.17 million handled in the year earlier period. Global container port throughput forecast will rise to 840 million units by 2018, with the fastest growing regions projected to be Africa and Greater China, according to shipping consultancy Drewry. This is representative of an average annual growth rate of 5.6% in the next 5 years. The consultancy firm added that overall growth in trade will boost average terminal use from the current 67% to 75% in 2018. In the next 5 years, Dubai Investments is planning 10 billion dirhams worth of real estate projects to benefit from the recovering property demand. These developments include the 2.5 billion dirham Murdiv Hills in Dubai. The project will feature 1,500 homes, a 230-room hotel, shops, and 200,000 square feet of office space. According to a local report, Dubai Investments CEO Khalid bin Kalban said that the company's Dubai Investment Real Estate Company unit will start tendering for the development in the next 2 months. The company says they don't see a need to borrow for Murdiv Hills, as the project will sell easily due to its size, location and components. However, they may need bank or debt market funding for a 7 billion dirham project planned in Dubai Investment Park. Meanwhile, work has already started on the 800 million dirham business park over in Fujairah, which is set to be completed by 2017. Al Taif Investment, a 60% owned unit of Dubai Investments and the developer of the business park, secured a 300 million dirham loan from Al Hilal Bank for the project. There are also ongoing talks to take over and complete the stalled construction within Dubai Investment Park between Dubai Investments and the unnamed owners of several unfurnished buildings. Abu Dhabi Commercial Bank has announced a financing agreement with Abu Dhabi Terminals for the development of the Khalifa Port container terminal. The 300 million dirham agreement marks the first long-term finance solution for ADT. Abu Dhabi Commercial Bank will act as the sole provider of cash management, interest rate and lending services to support ADT's ambitious growth strategy and contribute to its local and global competitiveness. Martin van der Lind, the CEO of Abu Dhabi Terminals, was quoted as saying that Khalifa Port Container Terminal has witnessed a 20% year-on-year increase in containers handled since its opening in December 2012. This important financial partnership with ADCB allows us to invest in the required expansion to support the economic growth of the UAE and at the same time provide our customers with fast and efficient services. Research released today by UAE law firm Baker & McKenzie Habib Al-Mullah reveals that 2014 has been a strong year for cross-border merger and acquisitions. This rising trend for M&A activity here in the Middle East is set to continue in 2015, with the number and value of deals increasing significantly. Among the factors fueling optimism is the UAE's increasing importance as a business hub for the Middle East and Africa, as well as the opening of Saudi Arabia's stock exchange for foreign investors this year. The total value of Middle East inbound M&A activity has already surpassed 2013 by a 53% rise to reach $9.5 billion as of December the 14th, 2014. That's according to Thomson Reuters data. The largest recipient of inbound M&A activity in terms of value, with almost a 36% share, was the media and entertainment sector. In the UAE, the number of inbound M&A deals has fallen, while the deal value has increased. As of December the 14th, 58 deals were announced, compared with 62 in 2013, with an aggregate value of $3.98 billion compared to $1.29 billion in 2013. The US is the largest acquirer of UAE companies, with 8 deals worth $3.2 billion in total. Outbound activity last year has also far amounted to $4.52 billion, a 54% decline from the full 2013 figure of $9.91 billion. For the current year to date, the UK stands at 39%, Ireland 22.2%, Italy 14.8%, and Egypt 10.7%.